Hi, everybody. I'm Dan McAlister, VP of Product at Clear Capital. I lead Clear Capital's product development and innovation strategy across valuation, data and analytics, and automated collateral review. Been with Clear Capital for 15 years and have been heavily involved in our efforts to modernize the valuation process. We've got a great panel today, so let me first introduce you to our speakers. First, we got Scott Reuter. He's the Chief Appraiser and Single Family Director of Valuation at Freddie Mac. He's a state certified general appraiser with over 35 years of experience in appraisal valuation and collateral risk management. Scott, thanks for being with us today. We also have Daniel Miller. Daniel is the Director of Strategic Technology Partnerships within Seller Engagement in the Freddie Mac Single Family Acquisition Division. He's responsible for the teams managing strategic partner relationships, distribution, and adoption. Daniel, thank you for being with us.
Thanks for having us.
And then last but certainly not least, we've got Brian Voglesong. Brian's a Senior Vice President and National Collateral Officer at Guaranteed Rate. Brian's been in the mortgage industry longer than he cares to admit to any of us. And through the years, he's been in sales, wholesale retail operations, and works directly with Fannie and Freddie on collateral pilots, and was also part of the original development team with both Fannie and Freddie creating LCA and CU. Brian, many thanks for being with us today. All right, so thank you all for joining us on this webinar. We're going to kick things off. So Scott, let's start with some of the basics. So can you tell us, like, what is ACE plus PDR and what is an inspection-based appraisal waiver?
Yeah, thank you, Dan. Firstly, thanks to our friends at Clear Capital, you and your entire team. Daniel Miller, Bailey Jones behind the scene, and my friend Brian Voglesong at G-Rate, being a good guy and a great Freddie Mac partner. To your question, inspection-based waiver is really very simply a waiver, an inspection-informed waiver. And it's a way to leverage third-party to gain access to the dwelling to gather components of the interior of the dwelling, the condition, room count, and a variety of features to kind of help inform not only the condition of the dwelling, but also the waiver opinion. You'll kind of see on the next slide, I think a lot of this has really been enabled largely by the emerging tools and technology that's at our fingertips. And I think that's been a great driver of the technology. And again, it's enabled this to really exist as a standalone offering. And I think as we began to think about taking a step back, thinking of modernization in general, one of the levels of discussion, and I know you and I've talked about this, Dan, as you began to look at the appraisal process, one piece that kind of got componentized was the inspection. There's been a lot of discussion around the inspection and the components of the inspection. And I think this technology, just right outside of the appraisal space, has really enabled kind of another great product option. I think on the next page, we kind of teed up a few items to discuss relative to just why modernize. And to me, I know we've got 6 kind of inset sections here. I think the conversation really flows into 3 kind of main sections around tools, technology, and risk management. There's kind of a product-driven component, and then there's a couple of non-controllable elements. So to me, question kind of tying the last slide on tools and tech to this slide is, what do the emerging tools and technology help enable? So not only a why discussion, but a what discussion. And we begin kind of the discussion at Freddie Mac, reminding folks that our number one job is risk management, period. And a goal to that end, we're always looking and testing and working to help understand how we can responsibly manage and reduce risk to help streamline the loan manufacturing process. But when we look at innovation and modernization, we generally look at 3 kind of big components in this order. One is that as we begin to think about modernizing, that risk decision for non-traditional appraisal methods that we consider must be at least as good, if not better, than for traditional appraisals, right? That's a way to say we're not going to compromise or introduce any new risk in the spirit of innovating or modernizing. 1. 2, does it help bring efficiency to the process? Hopefully that's yes. And third, be able to reduce cost or eventually reduce cost over time. And we intentionally put them in that order, not to suggest that efficiency and cost aren't important, but they're not going to be number one. Number one is we want to absolutely ensure that we do have a balanced and reasonable considered eye on the risk management. The second piece I touched on was the product-driven component. It's covered on this slide in terms of kind of the spectrum of options. In terms of new product and innovation can help bring not only new consistency to the process, it can expand the product offerings, which kind of opens the door a bit wider to home ownership opportunities. And some of this innovation can actually help the borrower experience. And there's been a lot of focus on that generally in the valuation space, both in and outside of appraisal. And I guess the last piece, just before we move on, is the non-controllable components that the industry kind of hands us: the appraisal volume, appraiser capacity, and we'll get to kind of a slide that illustrates that in a moment. I think next we wanted to share the spectrum of product options, and I've certainly been around long enough that this years ago was not a spectrum. It was that far right box. It was traditional appraisal everywhere all the time because that was the only option we had. And I think really part of this eye to innovation and the modernization effort is really looking at these options and determining why and where. So left to right, you've got waiver, which for us is the ACE, the automated collateral evaluation. And then specific to this conversation, that PDR, that property data collection piece, fits right next to that, right outside the waiver, to kind of help inform, again, to my opening remarks, help inform that waiver decision. Sometimes the only thing it needs is just a little bit more information on the condition of the property, and that's where this PDR can really come into play. And then, of course, we're moving up. We have a desktop offering. Both Fannie and Freddie have published desktop offerings. We don't have a published policy offering for hybrid appraisal yet. I'm comfortable saying that because Fannie and Freddie collaborated on desktop and hybrid forms. So we're hopeful that we can also move into the form, the hybrid appraisal environment very soon, up to and then including on the spectrum the traditional appraisal. I think next we've got just a quick view of the appraiser capacity and volume that Freddie Mac monitors over time. This is kind of roughly an 8-year look back. And if you've seen me speak or share the slide before, it really is a slide that we update and we monitor monthly to not only really track volume, segregated here, bottom up by purchase and refinance, shaded differently, but also capturing that appraiser capacity line that kind of runs through the slide. And that amber line is really the number of appraisers, or really more specifically the unique license credentials that are submitting work to Fannie and Freddie. And you can see that's kind of wavering as we get into the 2023-2024 timeframe. So a couple of quick stories here: 2020 to 2021, you can see the explosion of the volume that happened during COVID, and really the stress and the strain that it put on existing appraiser capacity. We understand we're in a completely different environment now, but sometimes, and the discussion may migrate to this, sometimes this is the exact time, the perfect time that we need to be thinking about innovating. We certainly look at innovation with an eye to risk and added value, and we remember, all too well the painfully long turn times for traditional appraisals during the peak of the pandemic. Volumes quickly escalated, and again, that put tremendous stress on appraisers across the country. I think the last slide I have to share next, Dan, is the ongoing monitoring of the mortgage interest rate movement that we also track here at Freddie Mac. You can see rates seem to kind of be persistently hovering right around 7%. This is the year look back, and I mean, if you've been in the business as long as I have, if you expand this out, which, by the way, if you go to Freddie Mac's site, this is an interactive, you can go back 50 years. And on that spectrum, this is relatively low, but we understand it's twice, if not more than that, the rates that we saw over the past couple of years. So it's a long way to set up and say it has kind of allowed the market to become somewhat static and stabilized. Markets leveled off, and sometimes short-term memory kind of fades. And I think it just lulls a lot of us across the industry into a sense of complacency, and we're a little bit less motivated to modernize. And I think I get that. So I say that to say I fully understand that. But I think it leaves companies kind of ill prepared for the next market upheaval, which is not an if, but when. It will happen. And so we're hoping we can continue to partner with good folks like you and Clear Capital and your company, and again, have great partners like G-Rate to allow us to kind of continue to modernize in the collateral valuation space and allow us to do what the broader team at Freddie does all day long very well, which is keep a sharp eye on risk mitigation, quality, and the consistency of the products that we oversee. So with that, I'll hand it back to you, Dan. I look forward to bridging the discussion into the real expert here, which is Daniel Miller, with all the ins and outs of the ACE PDR product.
Thanks so much, Scott. That was such a great foundation for the rest of this discussion. And these last couple slides on some of these market forces, I think what we're seeing right now is we're actually seeing the market conditions building towards history, potentially history repeating itself in some ways. So the term higher for longer, we're really creating conditions for the potential of a refinance boom that could put further strain on appraiser capacity. I think what's really interesting, if you look back to 2016, that was really when a lot of the appraisal modernization efforts across the industry started to really kick off, right? Because back in 2016, we had about 40,000 appraisers handling roughly 500,000 appraisals a month. And that was really starting to put big strain on turn times. Over 2 weeks, there was a lot of markets that were 2 to 4 weeks. I remember a lot of stories about lenders having to, put borrowers up in hotels because they were waiting to close on loans, right? And Scott, to your point, we it's easy to kind of forget about those conditions, but really what we're seeing now is the market conditions building to see something very similar to 2016 that kind of kick-started all of the appraisal modernization discussions. So, what we could see is if interest rates hit about 6% in 2025, for instance, probably won't get there in 2024. Approximately 5 million loans could be eligible for refinance at that point. And that's based on the number of loans originated. If we look kind of just back to some of these graphs here that have been originated at rates above 6%. And that's going to, that creates a big pool. That could, based on the number of appraisers submitting to UCDP today, that could create the condition of actually more appraisals per appraiser than we saw in 2016. And so programs like ACE plus PDR, getting involved with them now can give you a head start on getting that release valve, right? So I think to echo Scott's point, right, starting to work on new programs where the pressure is a little bit less right now from a volume perspective could allow you to get your feet under you now. Brian will talk through their efforts on that front in just a little bit. But now that Scott has kind of given us the broad picture, we kind of know what's happening in the market. We know the what and the why about ACE plus PDR. Daniel, we want to bring you forward to talk about some of the nuts and bolts and how the process all works. So could you kind of guide us through what's the process? How does the lender use the program?
Sure. So this is kind of a simplistic view. So there's a few more steps that I'll comment on here to make sure it's clear. There's also some new updates that Freddie Mac has announced over the last month or so that will be in effect next Wednesday. And so I'll highlight on some of those as well as we step through the next couple slides. So to start with, the lender runs their loan application through our loan product advisor system. When they do that, they'll receive a message that indicates when that loan is eligible for ACE plus PDR. And when it's eligible for ACE plus PDR, the lender would order a PDR. So order that property data report. They'll order it with a data collector that's been trained, a data collector that is either an appraiser, a non-appraiser, or appraiser trainee. So for example, with Clear Capital, they may be a real estate agent. So it's real important there to make sure they're a trained data collector. That's really the key. With some of the uniformity that I think Scott talked about earlier, with the inspection process that we've tried to instill with some of this newer process around the inspection is really something that offers and opens this up to anyone that meets the requirements and is properly trained and passes the background check and those types of things. So the property data collector goes out to the home. They perform the inspection. They use a mobile device that's been set up with an application to collect all of the data points. As they collect those data points, that data is going to go back to Clear Capital or another provider. They're going to perform some level of QC on that data. And then a new step that is probably a little bit more visible starting next Wednesday is that data is being sent to a Freddie Mac API called our Beyond ACE or Base API. That API is able to provide messaging. That messaging will later be available to the lender. So in addition to Clear Capital returning that PDR back to the lender with whatever messaging came from the API, lenders really want to have that clear insight of what came back from the API and what they need to look at in order to retain their collateral rep and warrant relief on value from Freddie. And they'll do that through LPA. So LPA, beginning next Wednesday, will have messaging that highlights some of those items, and we'll cover some of those scenarios in just a moment. So anyway, that lender will go through their decision process and underwriting. They may decide they need to order inspection or some type of repair. They may indicate from messaging or through their review that an upgrade is required. So they'll do that, and then they'll move forward with the loan. And then any questions on that, Dan, or anyone else?
No, I think Daniel, that's a great overview. And, I know maybe you could speak to really briefly just efforts you guys have made around the broader technology ecosystem. I know, trying to make this really simple to adopt within your LOS. If you could maybe just speak to any efforts there.
Yeah, and so what we've done essentially is we're tying that data from our API directly back into the loan application. So once that data is submitted, and the lender reruns their loan application through LPA, they'll automatically start to receive those messages. So those messages will say things like, there's something that indicates maybe it's a 2-unit property. And so a 2-unit property would not be eligible for ACE plus PDR. So at that point, you need to upgrade that to the appropriate form type for the appraisal to proceed. There's other messages that might be highlighted from LPA that indicate that through that inspection, the trained data collector identified that there may be a hole in the roof or some leaky plumbing with some indications under a sink or something. Any various things that the lender might want to look at further. The lender may need to require a repair or may want to look at further if it's some indication of potential termite damage or something where they want to call a termite inspector. So those are types of things that now the lender will get a little bit more certainty with it because those messages will be right front and center back in LPA. So whether you're a correspondent delivering to an aggregator lender and that aggregator can look at those LPA findings directly on the LPA feedback certificate. They don't have to worry about going back to find the PDR, figure out where the findings from the API may have been, because they'll be much more front and center to their process.
Thanks, Daniel. And I'd just add too that, I think ACE plus PDR has been in production now for, almost 2 years. We're coming up on the 2-year point. And I think by this time, some of the trailblazers, the early adopters, the technology systems across LOS providers, and order management systems down to providers like Clear Capital is like the integration of the systems is ready, right? So I think there's a lot less friction today than even a year ago or 18 months ago around the technology system, and having everything be basically a plug and play and making it feel like a very familiar process to the traditional appraisal process, with all the kind of same tools and integrations there to support it. Do have a couple quick questions that have come in. Paul Heckman, how many PDRs have to be converted to a full or a hybrid? So, Paul, for Clear Capital's experience, we're seeing about 3% of PDRs be upgraded to a hybrid appraisal. So it truly is an exception process that's available, when certain conditions exist. But it doesn't happen. It is truly an exception process.
Yeah, very low single digit number. Yeah, that's what we're hearing across the board. So good to see
Yeah.
that's your experience there as well.
And Greg has a couple questions about Clear Capital's product. Greg, I'll come back to your questions a little bit later as we talk about kind of Clear Capital's solutions there. So Daniel, thanks for walking us through the nuts and bolts of the process. Let's talk a little bit about a couple more parts of the policy. So first, can you just run us through what loans are eligible? What types of mortgages are eligible?
Yeah. So again, those one unit dwellings. So single family home, a one unit condo. If you go beyond that, it would need to have an appraisal. And so if as long as the loans run through LPA correctly, LPA is going to identify that it would not have offered ACE plus PDR. But as we all know, sometimes the data that comes in on an early on a loan app may not be a completely accurate. And so sometimes there are things that are learned a little bit later on, hopefully before someone does an inspection, but occasionally it does happen. And then also in terms of some of the LTV thresholds, we were able about a year or so ago to add the purchases to the mix. So between purchases and refinance, we do it for both cash out and rate and term refinance. And so primary homes, secondary homes at various LTV thresholds. So definitely excited to see what the eligibility has really meant for the market and then being able to adopt.
Awesome. And Daniel, a couple more just like kind of rapid fire policy questions. Once a loan receives eligibility for ACE plus PDR and LPA, how long is that offer good for? When does it expire?
Yeah, so that ACE plus PDR offers is valid for 120 days. If it's more than 120 days old as of the note date, then the loan must be resubmitted to LPA to determine whether that offer is still eligible.
Cool. So 120-day time period for there. And then what about the shelf life of the PDR? How long is the PDR good for?
Yeah, so a PDR is good for 12 months. So in that prior scenario, if you rerun an LPA, the PDR doesn't expire after 120 days, just the offer to do ACE plus PDR. And so as long as you still had it, it was done within a reasonable time period. In this case, our cutoff is 12 months. Then you can continue to use that PDR. It's just that you need to resubmit to LPA in order to ensure that the loan still meets the criteria to be eligible for ACE plus PDR.
Great, thank you for that. So Daniel, I want to kind of loop back to a couple of the advances in the program that you alluded to in the process flow. So the whole inspection-based waiver ecosystem recently got a big upgrade. So with the implementation of the Uniform Property Data Set, can you talk us through the Uniform Property Data Set, or UPD? I'm going to get that acronym right
Sure.
this time, Dave.
No worries. So yeah, the UPD, which it looks like we also spelled it incorrectly on our page too. The UPD is the Uniform Property Data Set, and the Uniform Property Data Set is really a data set that Freddie Mac and Fannie Mae collaborated on together under the direction of our UMDP program, which is the Uniform Mortgage Data Program, which is where we're looking to drive consistency and processes across all the various data sets that lenders are working with and have to transmit to the GSEs as they underwrite their loans. And the UPD is really helpful to lenders. It's helpful to AMCs. It's helpful to appraisers that may receive a PDR and have to use it for a hybrid appraisal. It's helpful to a lot of folks in the industry because no matter what PDR you're looking at, whether that PDR is for a loan that may go to Fannie or may go to Freddie, that PDR should have some type of consistency to it because the underlying data that comes to both GSEs has to be the uniform property data set. And so we're really really happy that we can offer that. I know as you mentioned, Dan, we started this 2 years ago. It was July 17th of 2022. We led the market in releasing this type of thing broadly in our selling guide. And when we did that, there were a lot of other pilots that may be happening in the market. We were broad with ours, and there was some friction in what we were doing broadly and what other investors may be looking for. And through some of the feedback we gathered and other investors gathered, we got together and really were able to put in the UPD for the benefit of the industry. And
Awesome.
so, oh yeah, just was going to mention one other thing on that is just relative to the start date. So that effective date was April 1st. There is really some grandfathering for pipeline loans. That the loan application was earlier than April 1st, but for any new loan application, April 1st and forward must be, if there's a PDR order for AS plus PDR, you must use the uniform property data set.
And I think this is a good time to pull one of the questions forward. We got a question. Is the PDR review more intense than what an appraiser might be looking at? The description of leaky plumbing or possible termite damage makes it sound more like a home inspection than an appraisal from a property condition aspect. And I'd say that's a pretty good observation. I would say it falls a little bit in between a property inspection and what you typically see in an appraisal. So the way I think about UPD is kind of a hierarchy of what a home is, right? So a home has a site, it has structures, structures have levels, levels have rooms, rooms have features, features have condition and materials. And so what you see in a UPD, in a PDR report, is certainly a much more detailed level of granularity than a typical 1004 appraisal. It is intended to be kind of the eyes and ears of the appraiser and provide the collateral underwriting folks like really detailed information on, is there condition risk, is there collateral risk that needs to be identified. Now, if you are familiar at all with what's coming with UAD 3.6, the UPD and UAD 3.6 are very similar in that regard. For folks that are interested, we can certainly provide product samples after this, and we'll reach out to you to get you more information there. We'll also share some resources at the end here.
Yeah, and I would just say that, I mean, we've really tried to get to objective, fact-based data collection. So we've tried to, instead of asking someone, what's the condition of the property? That's really not what we're trying to get at. We're trying to get at with the data collector is these are types of issues that we want to know about, and we would like you to tell us if they exist. So some of them may be regarding various areas of the property, and really just helps drive some consistency with that process. And Scott can probably speak to this better than anyone else, is that just based on when you learned how to do inspections and who you may have learned from as an appraiser over time, and the training that you got may have been really different for each appraiser. And so we've tried to get to some standardization with this because we're using trained data collectors, and we want to have some consistency to the data and make sure there's some minimum standards to it.
Yeah, Daniel hit the nail on the head, Dan. And so in a broad sense, to kind of address the review question, our guide is pretty explicit on the seller oversight that's required here in terms of ensuring the accuracy and reliability of the PDR. So that's a long way to say yes, they do need to be reviewing these. To Daniel's point, we talk to appraisers all the time, myself included, and there wasn't an inspection class. There wasn't an inspection course. Everybody, the most, if not all, the practicing appraisers learned how to inspect, measure, and develop, an appraisal report, at least on the inspection side, in terms of what they gathered just from the quality of the supervisor who trained them. And I think this is a big shift, even though the application here is in a non-appraisal application, that we're trusting this technology. And I think that brings a lot of consistency. And Daniel's right. If you want to go to, I think it's 5603 in our published seller servicer guide, covers all the requirements, just the background, the training, the oversight that's required to ensure that now, once we're aligned, that we are aligned with the UPD data standard, that I think it's going to be a big step going forward in that transparency and consistency of that information.
Thanks, Scott. And Brian, did you want to share any experience you've had with the UPD or the scope of the data collection?
Yeah, I have notes on a lot of things. So everybody has done a fantastic job, and it's great working with all these folks. Since the most recent topic was the inspections and the conditions and all that, I'd like to address it. I'm coming from a different perspective than from everybody else. I'm coming more from the practical application of a lender, kind of, in the trenches. So there's different perspectives. Everything Scott said was accurate. Everything Daniel said was accurate. Everything everybody said was accurate. But then you've got your lender perspective, which is coming mostly from your originators, right? Because they don't think about the risk and consistency that Scott talked about. They think about, what does it mean to me and to my realtors and to my relationships. So I will tell you that training is going to be very, very key. And by the way, I'm not telling anybody what to do. I'm just strongly recommending that you do training and you take your top people if you're getting into this for the first time, because when you get all that detail that Dan McAlister talked about, it can be intimidating if people aren't used to it. You're used to seeing the traditional appraisal for all these years, and all of a sudden you get extra detail you've never seen before. Some people can overreact to that. Okay, so you really do need to train for it. Really what it is you just, in my opinion, you just get more detail than you're used to, which helps you make better informed decisions. But if you don't train your top people first, some people could overreact and therefore overcondition. And it has happened, and you can absolutely prevent that. I'd like to actually add to that the inspectors themselves, they're trained data inspectors, right? So it's a different scope of work than what appraisers are used to. So they handle things differently. And sometimes some of those folks have been recently trained, and they can overcondition or use language that might come across inflammatory. So these are all easy things to fix, but it's really cool to know about them up front and know to actually look for them. I'd like to give an example, and I'd like to use Clear Capital as an example. When we were first piloting this program, we did have some of those trained inspectors kind of overcondition. They asked for things that really kind of weren't traditionally asked for, or they asked for certifications that weren't necessary. They were new to it. I got together with vendors, including Clear Capital and Freddie Mac, and here's what I thought was absolutely fascinating. My initial reaction is, hey, gang, we need people that are more experienced doing these inspections. Freddie Mac's response was, hey, we need more QC on this product because it's newer. And I would say Clear Capital's reaction was, hey, we need to enhance the training, right? That's three different methods for solving the same issue, right? You know what was really cool? Clear Capital pretty much did all three. So Clear Capital beefed up their training of inspectors. They also gave us options of additional inspectors that were certified appraisers wherever they could. They gave us those options, and they beefed up their QC. That was a partnership between G-Rate, Clear Capital, and Freddie Mac, and it worked tremendously. What Clear Capital did was actually identify what I call inflammatory language. They just kind of found triggers. words that mean we should QC these. And they also kind of set up some rules. I'm sure Dan McAlister would know better than me, but they set up some rules of, hey, if this occurs, we need to take an extra look at this in QC. And that pretty much eliminated things. So my point being, anything that's kind of new has some hurdles and some growing pains. You can absolutely stop them from happening, if you're ready for it. So definitely train people. Think about it as all that detail leads to some head scratching for somebody who's new to it. So I personally think you should have your top collateral people in on these when you first do them, like we do. We had our escalation team do 100% of them until they had a 100% comfort level, and then trained all the rest of our collateral underwriters or credit underwriters to look at them.
Brian, I really appreciate your perspective and the partnership that all three of our companies have had to work through the growing pains. I think what we are showing on from making the program better, yes, there's the ongoing training, there's the alignment with expectations across all of the parties. And to kind of loop it back to the Freddie Mac side, a continued commitment from Freddie Mac to provide tools for underwriting to help make that adoption process and training process easier. And so, with the implementation of base API to standardize the data submission and the messages that are coming back that are currently part of the PDR PDFs, those are ways to help, and things that the underwriting folks need to be trained on. But Daniel, you also alluded to earlier some new tools coming to LPA that will help lenders. And so I wanted to give you an opportunity to kind of tell everybody about what's coming to LPA to kind of help with some of the things Brian's describing.
Yeah, so great question. So some of what we were able to put into LPA for next Wednesday, so it'll be June 12th. What that offers is, historically, lenders have always gotten messages for the last couple of years saying this loan's eligible for ACE plus PDR. It also fired a message saying that you get the rep and warrant relief tied to value, which a lender is really kind of keying in on. And so what we're putting out next week is, rather than just automatically fire that message, we are now able to look within LPA, go and pull the findings from the data that was submitted to the base API, and we're able to properly fire messages back to the lender. So in this case here, this kind of shows the before and the after. Before, you'll see here, for lenders that are used to looking at our LPA feedback certificate, on this top part we call the shield, you'll see under collateral rep and warrant relief at the top that it says not eligible in NA. But at the bottom, so from June 12th, so effective next Wednesday, it says eligible, meaning you can proceed with ACE plus PDR. And then the next value, instead of just being NA, says ACE plus property data report, or ACE plus PDR. And then down below, you would receive messages that indicate not only that you can proceed with ACE plus PDR, but once you have proceeded with ACE plus PDR, you'll see a message that says loan is eligible for collateral representation and warranty relief with a property data report. And so you'll get very clear indication, and that indication is now based on the submission to the base API rather than just kind of automatically firing. And in this case, it says that the submitted value, so in this case, it would have been an estimate or a purchase price is accepted for the subject property, and an appraisal is not required. Now, I would highlight what Scott said earlier, because this is always true, is that our messaging is based on what we can see by with rules running through the report and the data. We're not looking at photos. So if there's a hole in the roof or something that might create some livability concern with a property, where it might not be eligible to sell to Freddie Mac, those are things that the lender has to be sure that you can use the messaging as something that will help your underwriting process and maybe help you target a little bit better. But you still need to look at the report, make sure you're looking at those photos. It's really critical. So if you can go to the next slide. Okay, perfect. So similar example. In this case, the API messaging that is showing up under the collateral rep and warrant messages in LPA for this scenario now indicates that an upgrade is required. So you'll see here on the bottom little snippet of photo here that's effective June 12th, is that based on the property data report, an upgrade to a uniform residential appraisal report, a hybrid appraisal is required. So in that case, you would do a 70H. The lender would order a 70H with an appraiser, would send the property data report to that appraiser, and that appraiser would use that PDR to perform their hybrid appraisal.
Thanks,
and if you can
Daniel.
go to the next one.
One more.
Yeah, so last one of these, very similar. It indicates in this case that there are required repairs or inspections that were highlighted in the report. Now, this is something that's key for the lender because we are asking for just objective responses back from the data collectors of, are you seeing these issues? And they itemize out various condition issues that they might see with the property, various things that may be wrong that the lender needs to look at and the lender needs to underwrite to. And so in some cases you may see something, but as a lender, you know that does not rise to the level of making it a C5 or C6 property. And so therefore we can proceed. And so these are a little bit more something that the lender gets the guide here that says, based on the property data report, ensure that any required repairs or inspections are completed. But at the end of the day, the lender makes the decision as to whether those required inspections or repairs are something that would have created an issue to prevent sellability to Freddie Mac under a guide.
Thanks, Daniel. I think these tools will really help. And I wanted to just switch gears and pull Brian forward a bit. So we've talked a lot about the policy, the nuts and bolts. Brian, you started giving us some insight around experience you had with adoption. Maybe you could just give us a sense of, as G-Rate is one of the largest adopters of ACE plus PDR, any advice for lenders and how to get going and how to think about standing up this program?
Sure. Thanks for the question. I really appreciate that question. I want to talk about some of those hurdles. I want to talk about misconceptions, because if you want to get started, you got to nip some things in the bud, up front. Okay. And one of those are going to be misconceptions. But Daniel Miller was just talking about, being notifying that you're eligible for ACE plus PDR. This is going to sound like I'm being very overly simple here, but I assure you that if you're not ready for this, it could be an implementation problem. That is, because they show up in the same place as an ACE and they kind of look a little like ACE. We've had somewhere between 15 and 20 where people looked at it, thought they had an ACE, and then it got all the way to closing before it was picked up that they did not have an ACE. It's an ACE plus PDR. Now, I have zero complaints with Freddie Mac. I have zero complaints with Clear Capital. I mean, this is so clear. What Daniel Miller just showed us is so clear. All you have to do is read it. But reality is that there are people that are just going to glance at it and say, oh, cool, I have an ACE. I don't need an appraisal. So I would that's the first thing I would tell you right out of the gate is look for that and make sure you train for that. Okay. The next thing I'll tell you. Oh, and also when I'm giving you this practical, suggestions, if it sounds like I'm negative, I actually think that these products are the best innovations in the past 20 years. I absolutely love this, because when I'm selling it, and you do actually have to sell it to your sales force, I say to them, okay, well, here's what we have. No comps, no value, no adjustments, half the time and half the cost. I don't even understand why we need to have a conversation, right? I mean, Scott explained why they're safe and why the risk. They don't care about the safe and risk. They care about those things. Half the time, half the cost, and no adjustments, all those kinds of things. So I love the products. I'll tell you that please be careful for people thinking they have a full ACE when they don't. Another misconception that I still am dealing with to this day, and Dan McAlister mentioned that we were an early adopter, and we're fairly, I think, large in your group, right? there's some kind of misconception out there that this is a streamlined, I'm going to use the word streamlined process. So for that, there are people that literally put in homes that are in kind of rough condition because they think they're going to go right through this streamlined process. Okay. So you really do need to make it clear up front. There's nothing streamlined about the inspection. It is a full internal and external inspection. I don't know where they get it from, but there is a big part of the community, both in mortgage sales and in real estate sales, that think that this is some kind of, rubber stamp kind of, situation. And then when there is a condition, because there's active, water stains on the ceiling in the bathroom, or there's active mold, or there's, faulty wiring that's absolutely evident, they say, well, I thought this was supposed to be streamlined. So I would say that there's plenty of excellent sale points, right? Again, half the time, half the cost, and half the data, that should be enough for anybody. But when they go into it uninformed, the worst thing that's happened to us is when that happens, it usually happens on one of your top producers who then goes into a sales meeting and says to everybody, oh, don't use this product. It stinks. They hit me up for this, and this. It's unfair because it's inaccurate. However, if they do that, that damage is done. And you're not starting from scratch then. You're starting from less than scratch because you have to say, no, that was false information you got. But people tend to very much trust the top producers. I'm sorry, Scott, if I was
No, I was just going to say, you're right. You have to then overcome that misinformation. So,
yeah. So I would say to everybody, the programs are fantastic, but don't let people get the wrong idea of the product. I do hear that. I have heard this many times. I thought this was supposed to be streamlined, and the deal is it is, but not the inspection, right? And,
Brian, it's great that you're bringing this up because, and we have teams at Freddie Mac that specifically sit on our account teams and work with lenders to roll things like this out. Because this is some of the things that Brian's mentioning. These are not things where you just kind of flip a light switch on one day and decide you're going to do it. It takes a lot of thought to roll it out in a way that's efficient, works for your business process, works for your salespeople and folks that are interacting with the borrower. And you want to make sure you have a smooth process that's efficient for everyone and doesn't introduce any undue risk that folks are not expecting. So very important just to really kind of go through this and have an implementation plan.
Yeah. Another thing I'd like to add to that, Daniel, is that a lot of people in production have been lulled into a false sense of, well, that's not such a big deal. I can get an appraisal in 6 days. And you guys have supplied all the data that's going to show what's going to happen when rates come down, right? So this is also something like, if you're not ready for that when that happens, these are the perfect products to be ready for that, because it's less of a strain on the appraisers because you have trained property inspectors. So you're not digging into going into that well for the bodies to do this, okay? And also we're getting them back. I monitor it almost weekly. We're getting them back from Clear Capital on an average of 2.57 days. 2.57 days. So let's look at my entire career, which, as you said, was longer than I'd like to admit. But that's never happened in my entire career. Consistently 2.57 days. And also keep in mind that if the average is 2.57, that means there's a hell of a lot that are less than 2.57. We've gotten plenty of these in a day. It makes us a hero. It can make you a hero when you get one of these in a day and it's cleared and you're ready to go in a day, especially with all the products. We have 10-day mortgage products, blah, 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 blah. These tools are absolutely sensational. So for all those people that think they can get an appraisal in 5 days, 6 days, that's because the appraiser shortage has not been addressed. It's been addressed by interest rates. Volume went down. Everybody had layoffs. It's not because all of a sudden that problem got fixed. These are the products that fix that. These are the products that fix that.
Yeah. And I think borrowers at the same time, they enjoy paying a little bit less for a product that still meets the need for the loan. So if they can pay for a PDR instead of a full appraisal and it still gets the lender and their investor what's needed, then it's a good thing for them in addition to the turn time.
Yeah, during the pandemic, their brother paid $1,500 for an appraisal because that's what it took to get an appraisal signed in less than 2 weeks, right? And now you can get one for $250.
Yeah, we've heard the horror stories, and we don't want to revisit that for sure. Hey, real quick, if I can, Dan and team, Tracy put a couple of good questions in the Q&A, and that might be outside of line of sight. I answered, and I'm rereading I think my mind was going faster than my fingers, but I just wanted to highlight, she asked a couple things. One, can you substitute a hybrid with a full appraisal instead? Short answer is no. The baked in certifications embedded on the 1004 Form 70 prohibit that. Appraisers signing, certifying, swearing that they have performed a complete visual inspection of interior and exterior. That's why it needs to go on the hybrid form. That actually breaks out and keeps the appraiser compliant with what they did and did not do. And then,
Yeah. Can I add one other thing to that
sure,
too, Scott? Is
yeah,
if the lender just ordered a full appraisal, a traditional 70, then the lender might have something to reconcile at the end of the day. If that full appraisal comes back and they don't show the photos that were in the other thing that
yeah,
maybe indicated some items, and there wasn't any narrative to explain it, but that PDR came to Freddie Mac at some point, and so. If there are differences of opinion or of some of that information, that appraiser using that initial PDR to do their report as a 70H, a hybrid, really ensures that they are able to document the differences of the way they look at it, so that it addresses it for the lender.
that's a great point. That's a great point. And Daniel, I hope stay plugged in here because I may need you. Is there a form used for the PDR reports? And I think we have an FAQ. I actually pasted that in, that Freddie Mac does not require a specific form for the PDR. We just require the PDF, which includes all the required and conditional UPD data points, photos, limiting conditions, and the floor plan. Is that correct?
Yeah, that's a great point. So this is something where, like with the LPA messaging that we're adding next Wednesday, effective June 12th, we're also learning other things as we progress. Ryan mentioned a few things that we learned on earlier on over the last few years. And so one things that we heard in the last 2 months, during some really feedback sessions with both some lenders as well as some of the business partners that have developed these solutions, including Clear Capital, is lenders want, even though the underlying data set is now that uniform property data set, it's the same. Sometimes the look and feel of that report might be different. And so those are things that we want to address. So though today we don't have a set format, likely in the months coming forward, we are likely to have a format that is prescribed, but there's no policy on it today. We haven't finalized what that would look like. It's a work stream that we need to kick off, and we will likely be kicking off just based on recent feedback over the last few weeks. So wanted to throw that in there.
And I'll
And real,
say, you know, if you're concerned about consistency right now, you can just use the Clear Capital Universal Data Collection product. A little tongue in cheek there. There's a question here about what AMCs does Clear Capital provide PDRs? Yes,
boy, do
our
they.
product is the Universal Data Collection.
Yeah.
We launched this really last year, but it's really like 7 or 8 years in the making. It delivers the uniform property data set. And just to show you guys some numbers, and we can kind of answer a couple questions along the way. We've done over 270,000 data collections. Now that's a combination of supporting inspection-based waiver programs like ACE plus PDR, as well as the hybrid appraisal pilots that really kicked off back in 2018. So regarding hybrid, our universal data collection is integrated into our hybrid appraisal solution. So if you ever do need that upgrade, we have great tools that we provide to the appraiser to explore the data collection, load data directly into their appraisal forms, and all of the technical workflow needed to facilitate that. We do have about 3,400 property data collectors. We've done PDRs in all 50 states, including Alaska, including Hawaii. You know, so you can really scale these with confidence because we really have coverage nationally. We got about 150 plus lenders ordering the universal data collection. As Brian noted, you know, 3 days, sub 3 day turn times. probably about 30–40% are actually less than 2 days. And overall, we see more than $400 per file savings over traditional appraisals. Partially because of those fast turn times and broad coverage, we see a lot fewer customer-driven escalations as compared to traditional appraisals. We had a question about the sketch. How many AMCs handle the building sketch? Most AMCs cannot provide. So in order to become an approved provider of PDRs for Freddie Mac, there's, Daniel and his team go through a really rigorous kind of approval process. Clear Capital has built our Clear Insight mobile app, and we have integrated the Cubicasa floor plan technology directly into our app. So the app guides the data collectors through the collection of all the required data points and photos, and then they also do a scan. Cubicasa allows you to do a scan of the structure in, my home's about 2,500 square feet. I've scanned it a few times. It takes about 6 minutes. And it delivers very accurate ANSI aligned floor plan and digital GLA. So we are not the only ones that have solutions for floor plans. Freddie Mac's website does have resources for who is approved, but we have a ton of experience.
We have a list of verified providers. We actually don't approve anyone.
Approved, verified. Thank you.
Verify. We verify the data meets our technical specifications, but we don't approve anyone. So I just wanted to just call that out.
Thanks, Dan.
Okay, Dan, let me just jump in real quick because you talked about coverage all over the country. I'm not going to trash another vendor, but I am going to give you guys kudos because we have two vendors that we actually cut off our list for ACE Plus PDR because they overpromised. They said they had coverage in areas that they didn't. I would much rather them have said, we don't have coverage there, because then I would have gone to the next one. But they told us they did. And remember when I said that your top producers, if something happens to them, they go tell people that the product is the problem? That happened to me because it took them 3 days to finally get somebody to that was able to do it, to get coverage. And so the big problem there was then that took 2.5 days. So now we're at 5.5 days. We were telling people that we were averaging 2.5 days, and we had egg on our face. Happened a couple of times. We cut those guys off. So kudos to you guys for having that national coverage. And that's another thing I think you should vet out up front with any vendor that you're going to use this for. And also Cubicasa, I could do about an hour and a half on Cubicasa. So I'm just going to say this. Here's what we did with Cubicasa. Before we recommended it, we wanted to make sure it worked. So I had one of our certified licensed appraisers who worked for us do it on his own house. And I had somebody in my collateral department that was like a junior that had no appraisal experience whatsoever. It took the experienced person exactly 6 minutes to do it. It took the completely inexperienced person who knows nothing about appraisals 9 minutes to do it. So we were absolutely thrilled. And from that day on, we've been recommending it to everybody because you actually get a better sketch, and to me, this eventual will bring desktop appraisals back into the fold, right? Because I'm like the last guy in the world that still believes in them, but Cubicasa is going to be the fix for them. So just wanted to add those things. Thanks.
Appreciate that, Brian. And just one more thing to wrap, Daniel, Brian, Scott, they all talked about the importance of training the data collector panel. Clear Capital utilizes our real estate and broker agent panel. We believe that they're particularly qualified for this type of work. And I will point out that when we say real estate agents, we're not talking about the listing agent of the property. If you know anything about Clear Capital, we've got a deep experience with BPOs and utilizing independent third-party real estate agents. So we verify that real estate agent is not a part, or their office is not a part of the transaction. They have to go through a specific certification process, and we background check them for a 10-year period when they join the panel, and then for 1-year renewals thereafter. We do a lot of continuous training as our technology evolves. We continue to develop and improve the Clear Insight and Kubicasa technology, as well as share updates when we learn and discuss things with Brian and Daniel and team. Obviously, we also maintain the independence standards as well for data collectors. So there was a couple questions about access to the slides and the recording. We will distribute that. We are right at the top of the hour, so I just want to highlight this resource. This is Freddie Mac's resources for learning more about ACE plus PDR and all of the other collateral offerings. Just to wrap up, big thank you to Scott. Scott maybe has one point to add before.
I didn't want to step on your concluding remarks. Jancy was kind enough to put a link to our ACE PDR FAQs in the chat. So that is off of our resource page. You can link off to a variety of things. But anyway, thank you for that.
Thanks so much. And Scott, big thanks to you, Daniel and Brian, for giving us such a well-rounded session on ACE plus PDR. Thank you guys.
Thanks, Dan. We appreciate the partnership.
Yeah. Thanks, Brian. Thanks, Dan. Thanks, everyone.
Thank you, everyone.
All right. And with that, we'll wrap for today. Thank you all so much for joining us.